All right, Bucket Strategy Investing. So Gene Pastula here with us. I'm Johnny Dean, Professor Rick Plum. And Gene, by the way, if you want to reach Gene or any Lucia Capital Group advisor or anybody Westland, whatever, you can reach them at this number. Gene? No, I'll tell you. 800-644-1150. I've done that before where I've tossed to somebody and they didn't know what the number
I had no clue.
Well, because you don't ever call it, but I'm telling you because I give it every day. 800-644-1150. You can reach Gene Pastula. He's going to tell you in just a second here exactly what we've been talking about with regard to these products. Now, if you just joined us, Gene Pastula, who is our resident insurance guru. Gene, you're talking about something that people have heard, which started the segment by saying stock market returns with no risk. And Professor Plum laughed, and fortunately, Gene, you laughed about that too. But what we're talking about here is something where you can actually earn something greater than what you might be able to get on a standard bond or CD or something like that.
Yeah, well, the reason I brought it up, I mean, other than the fact that I want to just kind of clear the air for people who have been perhaps pitched or listening to this, and they see that and they're wondering what the heck, to make it a little bit simpler and say, what these insurance companies are doing is real and it is proven and it works. But the big thing about it is that they do this in order to be able to provide benefits. And the whole difference between investing in stocks and bonds and what have you, you don't know what the rate of return is going to be. You don't know what the result is going to be, but you're looking for the best that you can get. I mean, that's the whole idea. When you're talking about insurance, and particularly older people who are getting ready to retire or are in retirement, they have specific objectives that they want to achieve. They want to make sure that their money doesn't run out and they have an income for the rest of their lives and their lives of their spouse. They want to make sure that that when they have an incident of needing long-term care, which is very prevalent in more than half of us. That's also very expensive, that the money that will automatically be there and they won't have that high risk of depleting their entire assets. I mean, looking at $120,000 a year to be taken care of in a decent facility or in your home, that can deplete your investments pretty fast. Or leaving a legacy. So all these things here is what insurance does, and the biggest situation or problem that I've seen over the years is a lack of understanding of that the fact is that these products are financially viable. Mm-hmm. They compete well with the other types of investments out there, given the fact that there's a lot of assurances in what they'd say they're going to do. If they say they're going to pay your beneficiary $500,000 when you die, if you put this money in here, they have to honor that promise. And so what we're doing now, and why I'm here, beating the drum, is that an awful lot of people are sitting around looking, for example, at the biggest financial problem that most people face is the potential for having to start paying $6,000, $8,000, $10,000 a month for long-term care. I had a person come up to me at a seminar last Thursday and say, you set up to $10,000. She says, my brother-in-law just has been paying $12,500 a month.
$12,500 a month.
$12,500 a month to take care of my sister, and obviously not everybody is has that kind of money.
That's high cost.
It is. But you know what? It's not unusual if you start talking to people who are senior lawyers for
elder care.
Thank you. Elder care. I have him here because that's.
We're here to bail you out there, Gene.
Yes.
Go right ahead.
If you talk to elder care attorneys who deal with this all the time, and you hear some of the numbers they throw out, it's amazing. But people don't want to buy a policy and pay $3,000, $4,000, $5,000 a year and hope to God they never use it. Well, the life insurance business allows them, because of these investment strategies that they have and the ability to incorporate very competitive interest rates in a fixed interest environment, they're able to guarantee that a person can put money into one of these plans and know that one or two things are going to happen. One, they're going to need long-term care, in which case the insurance company is going to pay a huge amount of money if needed. I mean, you know.
Yeah.
But they may not need long-term care, and the insurance company is going to still pay a huge amount of money to their beneficiary.
They're either going to need the long-term care
or they're not going to die because they're going to die.
They're going to die.
Yeah, it's only
Well,
two things left after a certain age.
Well, yeah.
Well, there's
something to look
there's
forward
other
to.
things.
You're
yes.
either just going to
Jeez.
die or you're going to need long-term care insurance and you're going to die too, by the way.
From a financial
Yes.
planning perspective, that's kind of where you're at, you know. So that's the point. Is that, I mean, we offer life insurance contracts that allow the client to either just move deposit money in one lump sum, or stage it over a period of years into a contract that will create a death benefit like any insurance does. I mean, I doubt if we're talking about too many viewers or listeners that don't know the concept of buying a life insurance
Tax-free,
policy.
by the way.
All tax-free, but the difference is that this product, if you need or when you need long-term care, will start to pay that benefit out to reimburse you for the cost of care.
Well, the insurance company realizes at this point they're not too far from making that death benefit payment anyway.
Exactly.
So they're going to pay the death benefit.
But you know what? Until we came and reminded them of that, they never thought of it. You know, it never occurred to them that all they have to do is tweak it just a little bit, and you know, on average, they're going to pay the death benefit in that situation maybe 2-3 years earlier than they would have.
Yeah.
And I mean, it works. The money works, and the promises. I tell you, the promises have been made year in and year out for the 25, almost 30 years now that we've been doing this. I've been watching it happen. It's really good. And so I just want to assure people that this isn't, you know,
Isn't too good to be true.
It's not too good to be true. It is a fact, and it makes a lot of sense for a lot of people to be able to put money in this fashion. And of course, one of the things that's most important is that we talk about where their money is and what their needs are, and you know what they're trying to accomplish, and then design from a variety of companies and a variety of products that do this, the appropriate approach for them to do this without having to feel like their portfolio has been invaded
Well, no.
or their income is going down.
Gene Pastula, the standard long-term care policy, since you brought that up, is I write a check to an insurance company as a premium in case I need long-term care. The money's gone. I'll never see it again. The insurance company now owns that money. And the more checks I write, the more I'm really hoping that I'm going to have some sort of payout from this insurance company where I wind up, you know, getting all my money back. But nobody wants to do that. I personally don't want to have to be in a facility for 3 years or 4 years or whatever, because that means I got trouble. So
it's emotionally difficult to purchase one of those kinds of products. But when you're talking about, I mean, literally in the context of your portfolio and investing and all the rest, when you're talking about doing it this way, it's basically another kind of investment that will provide a rate of return. Only thing you don't know about is when. And so if you don't know how long you're going to take till you get the investment, then what? You don't know what the rate of return is until then.
Well, you don't, but you're
and
not
until
buying
then,
it
you don't care.
You don't care, and that's the thing. See, that's the thing. When if I'm handing the insurance company some money now, at least in this case, I know that somebody's going to get it back.
Exactly.
When it comes to a death benefit, you're actually hoping for an investment rate of return that's on the smaller side, because that means you lived a long
Your
time.
heirs are generally hoping.
If your heirs don't like you much, they're hoping for a very large rate of return on your investment, which means you go away very quickly.
Well, they could like you, but they just need the money. You know,
They like the money more.
Exactly.
Well, that's why you have it, though. I mean,
Sure,
you know,
exactly.
that's why
So,
it's there.
I mean, when you put it all in perspective of everything else you're doing, and you look at it, you know, intellectually, you see that these are very good products, and people should hold them in higher regard at least long enough to consider them as whether or not they want to put them in their portfolio.
Yeah, and you may not have even known they existed, which is the other side of this.
In most cases, that's the case.
Right, which is why you're here. So I tell you what you're going to do now. You're going to get up. You're going to go talk to some people. I'm going to give the number. It's 800-644-1150. They might know that, but that's the off-air number. Gene will be there. You can talk.
I won't
to
be
him.
there, but you leave a message
well,
for
that's
me,
it,
and
Gene.
I'll call you
yes,
back.
exactly, because he's got to get back to the office. But anyway, Gene Pastula, thanks for joining us.
My pleasure.
And we'll talk to you again next week on some form of this, and we'll give you another really good headline grabber. Johnny Dean, Professor Rick Plum, coming back with more. 877-PLANNER, our number, Bucket Strategy Investing.